I think I'd just kick off by saying that infrastructure is key. And recently I was in China in the India-China dialogue on climate change. And one of the key things that came up was the model that a lot of the Asian countries have taken of overbuilding infrastructure and then looking to really bring growth on the back of that built-up infrastructure. And I would say that's where I see the leapfrogging that China spoke about, the Chinese delegation spoke about, where really we can have the luxury today of learning from other people's example and saying, can we do infrastructure in India more sustainably, more long-lasting, more affordable, and even to some extent just in time. And again, the Chinese delegation was telling us that India is so well poised and placed because of our IT talent, because of the fact that we still have to build more than 50-60% of the infrastructure that we need. Let me just say a few words about CDPQ. It's the fund manager of 34 different pension funds, public and private, in the province of Quebec in Canada. So we are now very close to $3 billion of investments in India. India is, I would say, the top market for us. And we take a lot of comfort from the fact that there are risks. The advantage we have is that we are a long-term investor. So why don't I stop here and move to Mr. Popley of IREDA. From your perspective, Mr. Popley, of a long-term financier of renewable energy projects, what do you think are the positive developments in the sector, and where do you see that there could be risks that still need to be mitigated?
If you look back at 2010, there were more of technology risks in solar projects. The cost was very high. And we felt that if at these costs, of course, the scale-up was not possible. Mm-hmm. Subsequently, how the things unfolded, and today we have come to around 3 rupees 50 paisa. Probably now the companies that are bidding low have also gained experience. So we also don't expect that quality should be a challenge. Mm-hmm. If you compare this with, say, thermal projects or hydro projects where the risks were there, they were perceived. Comparatively, in renewable energy sector, I think the risks are much, much lower, except that maybe going forward, when the penetration goes beyond 20%, which will be another 10 years, yes, the integration issues would be there. We expect that by that time, the battery prices should come down substantially. And we should be able to take care of balancing and integration issues. The financing cost has also come down substantially for renewables. The risk premium has come down. The funding is available at a much lower rate for renewables compared to conventional projects, maybe other infrastructure projects. Of course, the developers would still feel like Sunil is smiling. I mean, there are delays in receiving payments from them. That we will have to deal with till the health of the utilities improved.
Thank you very much, Mr. Popley. So, Sunil, I think Mr. Popley has set the stage for you very well. What would be your wish list on the policy side, regulatory side, if there are still things that you think can improve? And then in general, if there are trends that worry you?
You know, I believe there are three key risks which I see to the sector. Mm-hmm. And majority of those risks are probably linked to the regulatory risk and the political risk. Mm-hmm. And there's a new risk which in the sector we have added is judicial activism. Mm. We have seen it in road sector where courts have been giving orders saying that you have to shut down the toll plazas. Courts have auctioned coal blocks, cancelled coal blocks. Courts have cancelled many other old allocations. A lot of things have happened. If I look at it today, the power costs have come down. There is enough of projects available, but there is no demand for electricity. My belief is that our biggest risk today is demand. Okay, partially it is because of the efficiency in the systems, and partially because the industrial sector has not grown. If you look at the GDP growth, it is primarily because of the service sector. The ratio of service sector in the Indian GDP has grown phenomenally, and therefore the demand for power has gone down. Now, if I look at renewables in the power sector, that is growing much faster than the thermal sector. I agree, the risks are very less, but you will have to please power the product right. And if you are, and when I'm saying you price the product right, the price for the retail power should be also priced rightly. So idea is you balance out whole thing, bring a rationality in the system, your payment risk will go away. The second part is that if we are not able to solve the problem of discom payments, banks have come out saying that, okay, I'll give you an inbuilt 6 months DSRA into your loan agreement. But today, you may see a default of more than 6 months because you are in a system where transformation is taking place in utilities. So my suggestion would be, can we do it, increase that 6 months to 12 months? One de-stressing thing what banks have done is, earlier I used to get 12 years loan, 14 years loan. We are now going up to 20 years. Can we go up to 24 years? The moment you go up to 24 years, I think so you almost de-risk the project.
So, Kuljit, I think you've heard 3 different perspectives. What do you see as the performance track record in this sector?
So I think the fundamental point with infrastructure is, if in infrastructure sector, the government allows developers to make a high return, then frankly, they need not deliver anything on their part. The government need not do anything. Private sector will do everything. But if you're going to pursue competitive bidding, which is going to squeeze the margins lower and lower, then frankly, I think the private sector will ask for everything. So which means you'll have to have more and more solar parks and the norms. And if you don't give them those things, because the sheer competitive pressure, which I think Sunil alluded to, the sheer pressure of competition will ensure that ultimately you will win a project at a very, very low tariff, and then you will start thinking, how do I make a return out of that? So what needs to happen, there has to be, basically if you want to ensure that the projects are delivered on time, what really needs to happen is that you need to create the return for the sector. Make sure that people are making money. So instead of tracking the projects which are getting delayed, if I were in the government, I will really start tracking how many projects have made what kind of returns. So are there people who made a 20% return? Are there people who made a 15% return? Are there people who made a 0% rate of return? And then I accordingly work out my policy.
Venkat, you have the last word in terms of what your views are from the rating agency perspective.
One of the primary requirement for infrastructure to pick up is the depth in the debt market. We don't have long-term debt market at all. And our orientation is quite short-term in nature. We go for bank loans. Banks are typically able to fund construction risks, take construction risks, definitely not operating risks. That because the price they charge, the cost banks charge, I don't think it is sustainable for any project. So therefore, you have to really move. The banks will have to actually let the projects go and hit the debt market with kind of enhancements. And I'll go to thermal. The counterparty is one overarching risk in the sector that we see. We normally see in other geographies operating risks, lower PLF. It's not generating something, some kind of or some major overall maintenance expenses. But in India, it is really surprising that the counterparty risks are overarching, other operating risks and other risks. What we need is more certainty. It's fine if the discoms take 6 months or 1 year. At the end of 1 year, as long as we are sure that payment is going to flow in, we are perfectly fine with that because we can price it accordingly. The debt can be priced accordingly. The investors can invest or price the papers accordingly. So which is not happening. These are some of the risks which we have actually seen.